Hello friends, welcome to our post-market analysis for today. In our pre-market assessment, the outlook for the Nifty was negative to very negative. The key resistance levels were firmly established above the market and the chart structure suggested a high probability of a downward move. Today's session was a classic lesson in market dynamics. A story of bearish pressure, key support holds, and a market that ultimately fought to a stalemate. Let's break down exactly how this played out onto the chart. Looking at our first which is technical picture, which was clear. The index was trading around 25,278 level. A formidable resistance zone was visible between 25,300 and 25,400. The market had tried and failed to break this level previously, making it a key ceiling for any upward movement. The immediate support to which was at 25,200 level. A break below this was expected to trigger further selling, potentially down towards 25,000. The sell marker at 25,285 highlighted a clear level, like where selling pressure was anticipated to emerge. Our pre-market prediction was negative because the index was trapped below a strong resistance wall with clear air down to next support level. The path of least resistance appeared to be down. So coming to today's market behavior like a battle at support. Now let's look at what actually happened today. Using our technical analysis, the day opened with a gap down perfectly aligning with our negative bias. The index opened near 25,237, which was below our key support level of 25,278 from previous thing. This was the first confirmation of bearish strength. However, the bears could not sustain the pressure. The market did not collapse. Instead, it found a new lower support base and began to consolidate. Throughout the session, the Nifty traded in a tight range, bouncing between roughly 25,150 and 25,300. It repeatedly tested the lower end of this range but found buyers each time, preventing a steeper fall. The session closed at 25,237 with a minor loss of 0.17%. This is very crucial. While the market closed in the red, fulfilling the negative part of our prediction, the fact that it held about 25,150 and avoided a cascade of selling means it did not meet the very negative criteria, but at least it has predicted the negative. For first off, in essence, the bear successfully defended the resistance and pushed the market lower at the open, but the bull successfully defended the new lower support level, leading to a stalemate. So finally, we have concluded like how our prediction matched with a small change. Not very negative, but it has matched to be negative. So we have found the direction clear. So how did today's behavior match our pre-market prediction? Is like first prediction which is negative, and the market opened gap down, traded with a negative bias for the most of the day and closed lower only. So which is negative only. So very negative has been not matched because the key differentiation was the resilience at the support level. The market did not break down aggressively. The selling was controlled and the index consolidated, indicating a lack of follow through from the bears. The takeaway is that while the bearish pressure was real and initially effective, the underlying market structure is not as weak as a very negative outlook would require. The bulls put up a strong defense at lower levels. Going forward, the 25,150 to 25,200 zone is now the critical support to watch. A break below this could reopen the door for the bearish case towards 25,000. On the upside, the resistance to conquer remains at 25,300 to 25,400. Until one of these levels is decisively broken, we can expect this range bound cautious consolidation to continue. Thank you for your time. Please subscribe to channel. Please follow our channel, like, comment. Thank you.